And it's mostly just been a problem of like, we don't know what to do, and so people just do nothing, and people really aren't pushing the bounds. And I think like clarity will bring a lot of actually value to this space, because it will allow people who want to build legitimate things to build legitimate things. People just want to like, a lot of people want to build cool things, and that's like the fundamental nature, is they just want to build cool things and be rewarded for it. But it's been difficult to do that these days, and hopefully will get easier.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. You got some regulars here, Myles and Jim. Guys, welcome back. We just did an episode on go-to-market the other week, and welcome to the pod for the first time, Austin Adams. Austin, welcome.
Very exciting to be here. Looking forward to yapping about all things what we're yapping about.
Reunited, and it feels so good, Mike.
I love the energy, Jim. That's why you get the repeat invites. You bring the sass and the energy, my man.
I was going to sing it, but I felt like, I don't know. I haven't warmed up my vocal cords enough to sing.
Okay, cool. Well, by the end of the episode, then you can sing us all a song. Once your vocals are nice and warmed up, you've done your do, re, mi's or whatever. Okay, guys, this is going to be a great episode. We're going to be doing, we'll call this the PumpFun episode, but really we're going to be talking mostly about meme coins and some interesting angles on DEXs writ large and crypto overall, which is part of the reason we brought Austin on here. And Austin, maybe before we get into it, could you just give a super quick background about yourself and what you're doing at Whetstone?
Yeah, so I'm Austin. I'm the founder of Whetstone Research. We're sort of building things to accelerate the future of on-chain markets, like tokenization and new protocols built on top of on-chain markets. I guess previously I used to be a protocol researcher at Uniswap Labs, so very, very into the DEX space. Did a lot of like Uniswap v4 and Unichain work, so very opinionated on all things DEX. So it's sort of a good episode for me.
Oh, congratulations, by the way. Your baby launched today. We're recording this on Friday the 31st, and V4 is now live. So
thank you. I have a fun story about that. My first day at Uniswap, which was like 3.5 years ago or something, maybe 4, I walked into a meeting about Uniswap v4, and we were like, it's going to be out in a year, baby. And that was a very different room. And it was a very fun one. The design is a lot different than then, but I remember being like, oh yeah, we're going to have this out in a year. And now it's out today. So very exciting.
Can you actually give us a sense, I don't want to derail us too much here, but just the quantum of hooks that we can be expect. So maybe just super quick 20-second overview of what V4 is, and then what should we be expecting in terms of the amount of hooks, like if you had to guess, that are launching this coming year?
Yeah, I think it's a good question. So I think the Uniswap v4 is much more of a platform than Uniswap v3 was. So Uniswap v3, I think, was like a one-size-fits-all model, and Uniswap v4 enables people to build like really, really customized DEX solutions very simply with very little lines of code and sort of build inside Uniswap v4 instead of building like on top of Uniswap v3. Any v3 developer will tell you that like that was not fun. And how many hooks will we see? I think we'll see a lot of them, and I think we'll continue to see a lot of them. We'll probably see more next year. Something we saw with Uniswap v3 was that like no one built anything for like a year because it just took a lot of time to understand what was happening. And then as people internalized what it looked like, they built a lot of really interesting things after people internalized the differences between them. So I suspect we'll see that here, which is like a few things that are interesting, and then as people sort of figure out the solution space, they'll build really cool stuff.
Nice. Yeah, it'll be really interesting to check. And I, not to self-promote here, but we did a whole season on DEXs actually with Dan Robinson as a co-host, and V4 was something that we talked quite a bit about then. And it's funny, even I know you described it as more of a platform, but I didn't really realize for Uniswap the idea is always, the design philosophy has always been viewing it as a platform. So kind of a natural evolution, right, of where you guys started. But all right, so this podcast, we're going to do, not to do an intellectual discussion around meme coins, but we're going to do a little bit of an intellectual discussion around meme coins. But I also want to give a descriptor of some of the DEX infrastructure that exists today that has supported memes thus far, and probably makes sense to start at PumpFun. So Austin, can you just give us I realized actually to front run an episode you and I did with Jesse Walden that's going to come out in a little bit. I realized when we did that episode, I didn't really know a lot of the mechanics underneath the hood, had a very high level understanding of how PumpFun worked, but can you just give us an overview of how PumpFun actually works? And maybe if you could editorialize a little bit about why you think it's been so massively successful in terms of capturing the market for memes.
Yeah, I think it just made it really simple, right? I think like at the end of the day, like when we think about other token launching platforms that came before Pump, that's like Fjord Foundry, the Balancer sort of LBPs things, Uniswap V2 and Uniswap V3 in some sense. Like they were really, really hard to use and they continue to be very hard to use. And so like Uniswap V2, V3, you had to like bootstrap the liquidity necessary for Fjord Foundry. You'd need a bunch of the liquidity up front. So you need like 10-15% of the liquidity. I think Pump sort of just said like, look, let's just put things in a pool and let people buy them and they figure it out later, and made it very, 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 very simple. I think like I actually think we'll sort of see, just like Uniswap had that the sort of swap widget that everyone thinks about. I think we'll see something similar with Pump, where that have that like very, very simple launch like style. And so I think we'll see that in the future. And I think where Pump sort of shined was just being the first place, very simple, very fast, very easy to use. And that sort of had this like knock on effect of people being there very early, then the wealth effects and the attention going to the earliest possible, easiest place. And then that compounding over time into sort of being where people go to launch and go to look at. And perhaps it's not the most efficient system, but it works extremely well and users understand it very deeply. And that has led to like a lot of the problems with the protocol like not really mattering, because essentially like retail blasts enough capital in for it to get over it.
Hmm. All right, so this is probably a good time to describe what is happening underneath the hood in PumpFun, and if you could just describe just the overall mechanics, and even just give us a little bit of a review of like what a bonding curve is and how that actually works in practice, and then maybe the part where once the liquidity gets maxed out on PumpFun, the sort of transfer to Radium as well. Just kind of walk us through step by step the whole process.
Yeah, so there's like a sort of initial supply of the token that Pump Fund places in their own bonding curve. I believe they have control over that bonding curve. It's sort of custodial, and users can sort of come in, exchange with sort of like, just like a simple buy sell mechanic, and these tokens are sort of placed in the pool. And any user anywhere in the world can call buy or sell, send in the appropriate amount of Solana to get out the appropriate amount of ETH, or sorry, not ETH, the appropriate amount of token that they want to get out. And once they sort of sell enough tokens, there's no more tokens in the pool, and they have to, the Pump team actually has to like trigger a migration from their bonding curve to Radium. So they have to take all the liquidity out, move it, bond it against a certain amount of the tokens, and then place it in Radium. So under the hood, it's simply just like a buy sell mechanic where I believe they have like sort of like a backend or something that looks at the amounts in and amounts out that they need. And then once they reach the end price according to like the bonding curve they have, they take the liquidity out and migrate it. And this is sort of all done custodially and pretty simple and fast for them. And I think that was done in this way because it was very easy and it was very easy to get to market. And I think they were very focused on being the first and the fastest to market. So they made it as easy as possible for them to develop. It was especially like, I think people kind of forget that like early on when Pump started, Solana was very, very, very different back then. It was like all closed source. There was very little developers. And I think they sort of brought in the resurgence. And so in some sense like that, they're sort of like a relic of that time, the design that they have. And but at the same time, it's worked very well for them. So it's been very powerful for them to get to market so fast and be easy to use.
Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today. So I've got a couple more follow-on questions, and Jim and Myles jump in here wherever you guys want, either questions for Austin or opinions or whatever. But a couple of questions just in terms of, so why, I guess my first question here is, why does PumpFun not just like why migrate everything to Radium? Why not just vertically integrate there and create their own pools? And then there's also I'm pretty sure that they burn the SOL that gets swapped for the original inventory, right? And I actually saw they burned something like $500 million worth of Solana, which is pretty crazy. What's the reason for the burn there?
Yeah, so it's actually crazy. I think they've burned more SOL. I think they like made Solana deflationary in some sense by just burning the amount of SOL that they have, which is kind of crazy. And
And
I think
ultrasound money, SOL
it is the
ultrasound money.
yeah, it's the OG ultrasound money by just burning coins. And I get it. The reason they burn the LP tokens is they want to ensure that there exists liquidity to buy and sell in. So if you have like a full range constant product market maker position, there always exists a price at which users can sell their tokens at, no matter where you're at, and no matter how much has been sold in the pool, there always exists a price. And so they burn the liquidity because, so they're not like burning the Solana per se; they're burning the Solana and the tokens that are bonded together in sort of like a Uniswap V2 constant products market maker style position, and they burn the LP tokens that control those positions. That's actually what they're burning is those LP tokens, and they do that so that like no one can take them ever, and the liquidity always exists. I have some complications, or I'm not a huge fan of those decisions, but I get why they did it. It was very simple and it's very easy to ensure if no one can touch it. And so I think that's why they do it that way. It was just to be as easy as possible. And I forgot what your other question was.
It was around why they haven't like vertically integrated more let's say like services, right? So the first one being this partnership with Radium, and it's maybe head scratching to look at like the amount of, I don't know, leverage they have and say like, why are they letting Radium profit off of this? And why is it just Radium? Or like, why don't you open up maybe like a bidding war between the AMMs if you're going to go that route? Or you could just vertically integrate yourself. These are fair questions.
I would be surprised if there's not some relationship that exists. That's completely conspiracy theory. But at the end of the day, it's very, 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 very hard to make a DEX. I would know, and so it's in some sense like they don't have to worry about it. They don't have to like really care. They've made a lot of money by not having to think about it and not having to worry about it. I think that they probably have thought about making a DEX or have tried, and then they were kind of like, why? And why would we worry about that? We're printing money, and I get it. It's hard to make a DEX. I suspect eventually maybe they'll do that. We've seen sort of this vertical integration in DeFi, so they'll probably do that. But I think it's just not top of mind for them to do that.
So, I mean, I guess I kind of want to transition here as well into just talking about like, I mean, also I know you have some thoughts on just like that. Wait, what are some of the drawbacks of the PumpFun model? But I would be curious, when all of us are looking at this, does the future of DEXs in crypto writ large look more pump funny than less? I mean, what do you guys think about this as an enduring sort of trend?
So, I think the Austin, right? You're building, a configuration of Uniswap that will allow, more or less the same functionality to come out, right? And so I think it's more just that similar to a normal company adding different products and ways to trade on their platform, the protocols like Uniswap are going to do the same, where they're going to, they've come out with hooks, and folks like Austin have built ways to now like have a specialized version for launching tokens. They'll have another hook that is like probably great for huge block trades or like give some privacy features, right? And then, I think you can basically expand horizontally from there. But I think in general, every exchange wants to have some issuance component, right? I think that there is a really strong feedback loop that is created that like Pump.Fun is just kind of surfacing without actually going all in on maybe like the building out more applications off of the issuance because they're printing so much money at the moment just from the core product, right? But I think that's kind of the signal here, but we can talk about more.
Yeah, it seems like it's like they identified an obvious hole in the market that existed, and then we're able to capture because of like the speed and also just like the affordability of like trading on Solana, like they were able to really kind of just capture the zeitgeist in a way that like had not been considered. You know, I mean, we could ask the same question. We could ask like the opposite question to like Uniswap, for example, and be like, hey, like you guys have people creating these pools, like you never thought of like putting a token minter in there? Like that seems like a pretty like that's half of the job, right? And so that people could like launch tokens and then fulfill liquidity. I think one of the things that's like interesting is like Trump didn't use Pump, right? And I think there's like there's obvious, based on the pie chart, there's obvious reasons why they didn't use Pump.Fun, right? Like 80% is like insider allocation and 20% is for the rest of us. For the rest of us,
Jim, they wanted more control than
over the
yeah,
project,
more
Jim. Over the project.
more features, more configuration from their platform. Like, yeah, they would have been better off with Adopt, right?
So I think and like they used, I think, Meteora, right? And so I think like one of the things that we were talking a little bit before was like, okay, so you have meme coins launching, and now we're seeing like this like kind of grow into maybe social tokens or political tokens, which I'm not crazy about, but like or even like maybe like fair launches. And I think like and people are saying like ICOs are back. And I think people have a lot of people are showing like when they got into crypto, when they say that these are like these reflect ICOs, especially on Pump, because one of the things that's like very clear is that like the team or the person or the entity who launches these meme coins or these tokens, they don't have like, I don't think, any supply at initiation of like of the pool, and it creates some really weird results for like a team that actually wants to use some sort of fair launch mechanism to get a token out or to raise some capital or to have control of some, like just to have supply for themselves, like maybe 10% for the team that's going to build this thing. And it's like, all right, cool, go out and buy the token on Pump, but you have like, and it's like, oh well, we want to do a fair launch for the community. First and foremost, like the very first transaction is never the community. It's always like these like Mev sniper bots that are just like picking off the token. So I don't think that's your community. And then B, like what winds up happening is that the price rips up. And if you're a team that's trying to buy like 10% of the supply, you might not have enough money to buy the supply of the token if it's at like 500, if it's at $500,000, or if $500,000 is now 10% of the supply within like 30 seconds. It's really hard for you to even have enough tokens to be incentivized to continue, like we'll maybe talk about this, but like to be incentivized to continue to build the project in a bear market. Like there's almost probably zero chance that they would.
Maybe like the one way to frame this discussion is the mega trend here is that there's just a bunch of different assets getting issued on chain, and Pump figured out one profile that had a massive product market fit, right? Which is someone that wants to flip something into a meme, kind of gamble on it, but it's not super suitable for longer term teams or actually people that want to profit more directly. Like this is kind of the Meteora product market fit for Trump as well, right? Which is, I think this is sort of the pitch, right? Which is provide single-sided liquidity, or one-sided liquidity, which allows them to like sell into and like more directly profit. I don't know if you actually saw Ross Ulbright tried. There was a Ross meme coin that got launched. I think an enormous percentage was airdropped to him. He tried to provide one single-sided liquidity and sell some of it, and he messed it up and so ended up losing.
Twice.
Yeah,
He messed up twice.
Oh no, Ross. So sorry, dude. It's been 10 years since that guy's been operating a computer. I feel bad, but
blockchains.
Yeah,
They have seen it so many times.
Yeah.
But I think it's like reflective of, okay, the majority of people that onboard to Pump are onboarding to buy something, right? And then the persona that buys something, you want to then get them to issue something, right? And then I think the configurations and the UX that they want to issue something is not going to be kind of like have the level of control of like a Doppler, right? Or like a coin list. Like it's just going to be people are like, oh, cool, I'm just going to mint this meme. And then there's a question of now, like, do they actually want to go up market on the issuance side? Because that will involve actually changing the product as you're describing now for all the problems. And like, I don't know if you want to get an actual team because they're viewing Pump as this like amazing capital formation place. Like, yeah, you're gonna have to like let them have a little bit more control and like actually have some of their supply not get sniped, right? And at the same time, it's also much more crowded, I think, in that like up market part of issuance. You have like CoinList, you've got Echo, Legion, Doppler, and so yeah. I think that's probably the point in time we're at now, where they gotta decide.
I think like one thing that I think a lot about is like it's like really hard to interact with these markets. Like I was trying to provide liquidity for a token that we were talking about earlier on this podcast, and it was really, really, really hard. And I think about I like very deeply understand what's happening under the hood, and I was struggling to do it. So I can't imagine like Ross or anyone trying to provide liquidity for these things. And so I think that one problem is that like these users are entering a market structure that is like very, very unforgiving. We've seen so many people get destroyed exactly how he's done day in, day out, and to the point where we put incredible guardrails on LPing inside the Uniswap interface because we're just like, do you know what you're doing? Please don't do this if you don't. And so I think like that's actually one of the issues that's going to hold back all these things is like just interacting with on-chain markets is really hard. And we like need to abstract these things away from these users to make it easier. And in some sense, like Pump did that really well, right? Like, do people even realize like that? Like you don't have to even know what radium is to like use Pump. You don't have to know what like the square root price or concentrated liquidity. Like these are just like crazy concepts to them. And I think like that's one thing they did very well was like, don't think, just click and you'll have a good experience. And so I think that's one thing that a lot of other token launchers will struggle with as they expand past this very simple process is like giving controls to users is actually kind of bad sometimes because it's like confusing and they can mess it up. So you got to like give them controls, but also like not give them controls. And so I think that's one thing people will struggle with.
It feels like Pump is like specific for like I think what's happening is that like people are starting to use it for alternative purposes other than what it was initially designed for, and Pump is meant like there was a so Smack from Compound VC, just not to shill another podcast, but like he just started a podcast and he had his first one I think it launched yesterday, and I don't know, I can't pronounce the name of the research guy that he had on, but his name's Philippe. I can't pronounce the name of the company that he works at. But like,
this is the least effective shill of all time.
So sorry,
that's bad. That's a rough one.
It's called Smack Talk. It's on Spotify and YouTube. I'm not going to be a guest on it. I don't think anytime soon. But like they were talking about, there's two types of trade. There's two types of coins, right? There's a type of like investment that you make when you're buying something with the hope of selling it to someone else, and then there's like investment. There's like fundamental investing. There's like which is more like you think that this is going to be very big and you think it's going to have value and you're investing in something that you feel comfortable holding for like 10 years plus potentially. And like I think what Pump has done is the market that they've done is the hype market, the trend market, which is like just buy something with like the intention of selling it to someone else at a higher price, and like that is what it is for. And that is like so launch something, buy it, sell it, buy it. Like that's what it's good at, and like that's very simple. And for meme coins, I think it works when you start to do like projects that want to do fair launches, like that maybe have some sort of value beyond just like the meme itself. It gets a little bit dicier because like it's not fundamentally built for that, and you're looking for like an alternative like design, and you're looking for like an alternative like mechanism to launch that type of token, I think.
So I've got a question for you guys. Maybe we can transition a little bit to talking about just this phenomenon of meme coins writ large. It's been surprising, at least to me, how enduring this phenomenon has been. And there's a number of ways that you could track this, which is one, there have been these successive waves. So I was trying to pull up a dashboard before. I'll find it in 30 seconds. But just these sort of like these different waves of meme coins, which many people have tried to call the top on this. And it is just the new amount of coins that are being issued on Pump every day has been basically a one-way street up, and the amount of fees that have been generated is still pretty one-way street up, and it doesn't seem like that's changing anytime soon. Even as meme perform, it feels like harder and harder to trade meme coins now. It's like that roller coaster which gets lower and lower and lower, but this phenomenon keeps going. I think you could maybe even go back to past cycles and say this is the latest iteration of a behavior that's been extremely persistent within crypto, which is kind of the altcoins with pictures gambling, right? And this might have taken many different forms in the ICO era, in the NFT era, in the meme coin era, but you could make the argument that it's all the same thing, right? It's kind of degenerate gambling on chain and buying stuff that people don't really believe has long-term value. And so I don't know, whenever you have a trend that's arguably been going on for 10 plus years, it's I understand the knee-jerk reaction of looking at this and saying this isn't good. We might not just want this, right? Like sort of the normative reaction of this is not a good or moral thing, especially if a lot of retail is losing money, or it just feels silly and I don't understand it, and so I'm just going to assume that this is speculation. However, I do think there's a pretty compelling argument that this has been going on for 10 years, and so you probably shouldn't ignore it. And most of the fees that are being generated on these L1s and the infrastructure that we all like and view as very legitimate are mostly being driven by meme coin or NFT or whatever shitcoin trading. So it's also pretty hard to ignore this trend at the same time. So maybe we can kind of move from the mechanical discussion here into how enduring is this, do you guys think? Is there real value that's happening here? Do you mostly view that this is being pretty circular and relatively predatory? Like, how should we think about this? And then, Myles, I'm going to kick it to you at some point to talk about this publisher exchange model.
I guess like one thing, I guess I am very invested in this and I'm a little biased, but I do think it's incredibly enduring. I think this sort of like idea of permissionless capital formation is something that's like never really happened before. The ability for like anyone to buy something and anyone to issue something is very powerful from sort of a fundamental standpoint of like how things exist. I would actually attribute a lot of the issues that we have seen in the sort of like, we had white papers or tokens with the white paper where those were ICOs, and we had tokens with photos, those were NFTs. Now we just have tokens with tokens, and that's sort of at meme coins. I think a lot of that's actually because of like regulation and how bad it's been, in my opinion, and sort of like how unclear it's been. And the only thing that's been clear is that you can't do something that matters. And so everyone said, all right, screw it. We're just going to do like vaporware token stuff because like that's the only thing we know that can happen. And people have now wanting that like the only legal advice is remove every single thing you can do from this. And that's been kind of bad. And I don't know if we'll see these things evolve over time, but it sort of does seem like as clarity over what actually matters occurs, there's been more understanding from the market. And it's mostly just been a problem of like, we don't know what to do. And so people just do nothing, and people really aren't pushing the bounds. And I think like clarity will bring a lot of actually value to this space because it will allow people who want to build legitimate things to build legitimate things. People just want to like, a lot of people want to build cool things. And that's like the fundamental nature is they just want to build cool things and be rewarded for it. But it's been difficult to do that these days, and hopefully will get easier.
Yeah, I couldn't agree more. I think like no matter what you care about meme coins, everybody looks at crypto and sees like permissionless capital formation as a really strong signal, and something that like there's something there, right? And then we see this happen so many times. Like a team, new platform comes out, like okay, we see that signal through the noise. We want like go to market without kind of an anti-casino sort of approach, right? We're going to go after real world use cases, et cetera, et cetera. Then they go to like RWA issuers, and the RWA issuers are like, okay, we are kind of interested. We're prioritizing where like activity is happening, where users are, right? Like they're looking at this as a revenue generation sort of opportunity. They're not going to go to the empty chain, right? And then so the project at that point is like, oh, okay, crap. We need to get retail activity on the platform today. Like, what do we do? Let's run back, some of these playbooks. Let's have like the incentives, going, and then we'll get a bunch of liquidity in. Of course, you're going to have like meme coins and speculation come with that. Then they get a bunch of users and activity, and then the RWA, like the more like real world, mature crypto use cases, like partners look at this as more attractive, right? So it just kind of, I don't know whether projects like want this or not, they often find themselves like kind of at that point after banging their head against a wall, like trying to make, real world stuff happen. And that's the cold start problem with issuance and apps. Like applications need assets, right? And the issuers are only going to go where there's lots of activity. And so we can talk about like the publisher exchange idea afterwards, but that's why it's super interesting when you vertically integrate, issuance and some sort of application on top. Kind of kills that, cold start problem. But Jim, yeah, let me hear.
Yeah, I guess I would just say like narrative. Like there was a tweet I was like reading by a guy named Doug Funny that was just talking about like I think his like perception of like how long narratives are lasting, and that it's shorter and shorter and shorter, and like you kind of feel it. Like the infrastructure narrative was like 2 years long, which is like essentially through the bear, like infrastructure, and then like I forget what the next one was, but it was like the meme coins, and then like that maybe was like a year or so, and like the AI sort of narrative was about 6 to 8 weeks long, and now we're on like social tokens and like social and like that'll be like and now tokens are essentially going up and going down within like minutes. But at one point, meme coins were like it was like a whole thing where it was like very PVE, and it's just turning into like PvP. So I think like one of the things that this suggests to me, and I think he correctly stated this in his tweet, but something we've been talking about was like around Christmas time this year or last year. I was talking to the rest of the team, and we were just kind of like, man, like it feels like we're in the desperation phase of the market, where like people are putting on like 50x perps like on Hyperliquid or anywhere, and are just getting liquidated, like just getting crushed. I may or may not have been part of the liquidation squad, getting liquidated squad, not the liquidation squad, a few times, and I was like, man, this just feels like desperate trading, like just hoping that like, oh, Trump got in office, like let's just put a 50x perp on Bitcoin, and see what happens. And then I think like maybe 2 weeks ago, I was like, man, this feels like the exhaustion phase already a little bit. Like people are just tired. They've been trading on pumped up. Like I think one of the questions is like, what does this do to people's like attention spans? And like, what does this do to like your this ability to like engage? And a few folks we talked to, they're like, yeah, we have friends that like aren't doing so hot right now. Like people are staring at their computers for like 9 hours, and it's only 1 o'clock in the afternoon. I think Trump like kind of maybe like really accelerated this, where like that was the first time in a very long time where that weekend I felt like any minute I was away from my computer, I was like potentially missing something. And that's just exhausting. Like that's not how I operate. Like so like it was just like, holy crap. Like I walked away for, 4 hours. Melania launches, right? Like my buddy he was in front of his computer all day. He's like, I'm going to take a walk. I'm like, yeah, go take a walk around the block or something. He takes the subway ride, and like something else launches, right? Like I think Vine launched or something like that. And it's just this like, oh my God, like, oh my God. I'm just like, I just need to be, we're calling it locked in, but like, I don't quite think it's locked in. I think it's like just tethered and chained to our computers because we're just like, we're locked up. Exactly. Oh, nice. We're not locked in. We're locked up. And so I think that's like that feeling and that experience like does not last very, very long before like people burn out and just kind of go, oh my God, what am I doing? We need a reset. So I don't know. I don't know whether we're in the 8th inning or the 7th inning or the 9th inning of the bull market. But I think a lot of folks right now are, or the 4th inning. But like, I think right now people are pretty tired of this experience.
Yeah, I do think part of that's just like the market structure of Pump, like heavily rewards the earliest possible users. Like, I don't think that's actually like does not have to be a thing. Like, in some sense, like you can build a system in which the best value predictors are the people who benefit the most, and in some sense, like that is not. You don't have to be the first to every single thing if you are just the best at predicting what the value of this sort of thing will be. And I think that will radically shift sort of like how the market works, because it'll become more similar to like any other investing where it's like, I think this is good or I think this is bad. And it's not just like I slammed 50 SOL without looking at a contract or looking at anything, and I made a generational bag and can buy a yacht now. It's like, that's a really bad market structure, and it's like very draining to people using it. And I think we haven't really internalized that as much, and like how bad that is for both crypto people, assets at launching. It's like the only thing that matters is hype and intention, and not like what the value of these things actually is.
Yeah. Jim, what's your favorite quote? It's like, these violent delights have violent ends, right? And I do think
Westworld.
I do think the, whoever the timing part of the pump piece is what I do think has driven the virality so high, but has also made it, not sustainable.
Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today. Just like as zooming out for a second too, I think one of the Multicoin put out this great piece on internet capital markets the other day, but I think it's roughly right? Like you could sort of look at what we're building here as capital markets or highly capital markets like in nature. And they're permissionless, it's global, so you have kind of massive distribution from day one, but also you've taken down the cost of issuing by several orders of magnitude. So if you think about what it takes to issue an equity, right, and get it listed on something like the New York Stock Exchange or the NASDAQ, there is a huge hurdle rate, both in terms of actual cost of, first of all, you have to spin up a company, you have to paper everything, you have to pay lawyers. There's an actual capital outlay in the beginning. Then there's all the friction of the work that you have to do. And then there's compliance when you want to go public. And then there are different levels of friction, which you can look at as a hurdle rate for other types of assets. So that could be bonds, that could be real estate, whatever it is. So when the hurdle rate is high and you have a lot of regulation around it, fewer assets get issued. When you've essentially compressed that cost down to zero, you are going to see what is basically happening, which is just a flood of new assets getting issued. And some of that is just going to be hype and useless stuff, right? The noise to signal ratio is immense among meme coins, and probably the market structure is just broken. But I think there is maybe a point to be made that when you lower the cost of issuance, some of the capital formation that would have happened if the hurdle rate wasn't so high and is actually valuable is starting to happen now. And this is where I think just some humility in terms of what these meme coins are, what they could be over a long period of time. I don't know. It's a very persistent phenomenon. And maybe in 10 years, I'll just said this was all gambling and this all just sucked and it was a huge waste of time. I could also see, for instance, social tokens, like people issuing tokens of themselves, weirdly having some amount of value over time. And here's an analogy that I would give you guys is this whole attention economy thing is obviously real. And a thing that happens very often right now is someone builds a big audience on Instagram and then they want to monetize the audience. Okay, great. You have all these indirect ways that you need to monetize the audience. I'm going to create, a sneaker brand and put I'm going to create all of these bullshit products that aren't actually that useful. And I'm going to slap my name on it. And that's the most useful way that I can think to monetize. In a weird way, social tokens are just a more direct, honest way of monetizing that attention. The analogy that I would actually give you is in another way to think about this is in how people like to speculate on commodities. So in commodity markets, there's a bunch of different commodities that exist, soybeans, oil, whatever. But there's a huge demand to actually speculate on those things as well. And so sometimes you get these weird abnormalities in market structure that makes oil go negative because it has to actually physically settle at a certain point in time. And I think you could kind of look at it and be like, look, people kind of want to just gamble on the price of oil. You should maybe actually break this distinction in between the actual need to use oil and the desire to just speculate on it. And, I can look at negative things there. I can look at positive things, but you also could just look at it as a thing that makes sense and is probably going to happen. And there are pros and cons to it. So I think meme coins kind of also get jumbled in because there are different things. There's meme coins, which are just pictures. There are social tokens, which are celebrity tokens. We've started to see, I don't really know what to think about this, but company tokens, which are just completely devoid of equity whatsoever. And maybe there's a valuation gap, which is why people are launching those. But I don't know. There might be something here a little bit longer term in terms of lowering the cost of capital formation and actually the creation of fundamentally new asset classes in general, which I think is going to be a thing.
So the multi-coin piece, a good compliment to that. And now I'm going to try to say their name because I do want to give them credit for this. It's like, I think it's called Thea Research.
Thea. Oh yeah, Felipe. He was just on Blockworks. Yeah, or he's just on Bell Curve. Yeah, yeah.
Mm-hmm. Yeah, they published an article on like January 7th, which was like maybe a couple weeks prior to the multi-coin thesis one, called Internet Financial System, and it's really good. I actually highly recommend it, and it's very good. So maybe it's a compliment. Maybe there's a lot of overlap. I think there's quite a bit of overlap there. Yeah, I mean, it's essentially what you're talking about, like I mean, to some extent, especially when it's companies and like individuals. Like, there's two things here. So number one, and this is going to be a shill. We invested in like this company called Noise. And what they're doing is like they're essentially saying like, hey, don't bet on the meme coin, bet on the trend. And so it's going to be sort of like a mind share marketplace where like you can bet on whether like the mind share of a certain topic or a certain like maybe pre-launch network, like are people talking about it? Are people not talking about it? And you can actually like go long or you can go short on like whether you think there's going to be like more interest in this category or this like idea than there was, today. And so I think it's like an interesting way of like kind of, so maybe meme coins are like sort of maybe it's a derivative of meme coin trading. It's like, you can be right on the trend and wrong on the meme coin. And that's like a tough thing for some people to swallow, especially when there's like 5 different versions of the same meme coin with the same handle, with the same like ticker. And you just like picked the wrong one because like you don't know, because you're new to this and you're just trying things out. That was like so that's a shill, but like also I think it's pretty interesting. And we've been doing a few polls in like this group to see like, hey, are you long or short like crime? Like I think Vance just recently tweeted something that crime season is over. And so I just like threw a poll in last night and I was like, guys, Vance says crime season is over. Are you long crime season being over? Or are you short crime season not being over? And bad news, it was 77% short. So just for some feedback there on like whether or not crime season's over yet or not, or where we are in maybe the second or third inning of it. So there's that. And then as far as like, I mean, I've thought about like, I think social tokens are interesting. I mean, the question is like whether you can add or attribute some sort of value to it. And it doesn't necessarily have to be dollars. It's like airline miles. It's like all of those things, right? Like, can you give some sort of like benefit of some kind to someone in some way for buying this token? Maybe if you buy enough like fish tokens, you like the band, like you get like access to early like ticket sales or something like that. Maybe if you buy $20 million of Trump token, he'll have a meeting with you in the Oval Office. We don't know yet. But like, I think there's like a lot of ways to, and hopefully that works. Like, I think the one thing with social tokens in general, and maybe like where I get a little bit confused is like, one of the hardest things about social tokens is that like, it changes the way the person who creates one has to act. And I think that like when there's work involved, that's like excessive work from like what I do on in my daily life, then it makes it harder for that thing to actually like become valuable. With like friend tech, if I recall correctly, like you would buy a number of friend tech tokens and then you would be like added to like a group chat, right? Okay, great. You're in this chat with me. And now what are you asking me questions? Like, do I feel like obligated to like give you alpha or like send you CAs or like, and is that even like what I want to do with my day? I didn't really sign up for this.
But you're not you aren't so the use case here is for influencers who do, and by the way, all the dynamics that you're describing is this idea of like audience capture, having to change your day. You have to take annoying photos when you go out to eat, right? This is all shit that they do already. So for them, right, this is just a more direct, now when Jake Paul, he doesn't have to sell, poisonous Lunchables to the next generation. He can just launch a coin and we can all just say, I bet more people will know who Jake Paul is 5 years from now than knew him 5 years ago. Like, it actually might be, I think it's actually achieving the same thing without extra steps. And the friend tech thing was interesting, but the four of us on this call are not the audience for that, because you have a day job. Everyone on this call has a day job. So I think that's where friend tech, they didn't do enough work to figure out who their core audience was and then make the product better for them. Because like basically we were just like, I don't want to create alpha for you people. Like they should have just figured out who the core creators were and incentivize them more directly. But I want to transition into this this point, Myles. You surfaced a really interesting article on the publisher exchange, and just to maybe lay the groundwork for this. This is a rant that I've gone on like 6 or 7 times. So if you're hearing this for the 6th or 7th time, I apologize. But I do think one of the interesting, I think there's a media use case in crypto which has not yet been identified, and I can't really see how it's all going to come together. But I see the building blocks, and the building blocks for me actually start with the zoom out, the macro angle here is that I think social media is actually ripe for disruption, because one, they kind of started out in the open internet, but now they're all very walled gardens. I think you used to have very positive relationships with your social media apps. Now, like generally, social sentiment has shifted against them, with maybe the exception being TikTok. But also, they've played a massive part in undermining the media that came before them. Like everyone in crypto loves to criticize mainstream media. I think you could basically look at mainstream media and say they had 75% of their ad dollars get yanked and they have a talent problem. And like you could largely say that's the issue, and the business model has just imploded. But one of the things that crypto is really good at is, what social media still has today is a massive network effect. But what crypto is really good at is breaking those network effect by bootstrapping demand and token incentives. And so, you kind of look at some of these things that have been pioneered in crypto, like NFTs, meme coins, and I see them as solving problems. Like putting on my media operator hat, they solve problems. Like NFTs are, we at Blockworks spend a lot of time basically talking to a very small engaged community saying, go do this, go to this conference, sign up for this newsletter, subscribe to this research. And if you can actually, like, NFTs are a tool where you can build really strong engaged community and facilitate and reward that. So that to me solves a media problem. On the meme coin side, it's hard for me not to look at meme coins as a decentralized, like a market-based attention algorithm, which could one day potentially replace some of the work that social media companies have done. I could see society thinking that a market algorithm is fairer than someone in like politically some, shadowy supercoders in a room creating the algorithms. I can kind of, and then finally, there's a huge shift in something called first-party data to third-party data. Publishers used to have access to first-party data, which is like your job and your actual name and where you live and your job and that kind of thing. Now they only get access to third-party, so that's like where you live, your rough income, and things like that. It's much, much less valuable. But now that everyone does things on chain, you actually have addresses, and you can, like, they're public oftentimes, and you can see what's in there. And so I think about it from the standpoint of, if I'm advertising for permissionless the conference, it's so much more predictive whether or not you're going to sign up based on if you've traded on Uniswap 100 times in the last 2 months versus where you live or your geography. So I kind of see all of these building blocks out there for some new media angle that hasn't quite been fully fleshed out or explored here. And Myles, that's why I really liked what you sent over the other night, which was this idea of the publisher exchange. So my ramble's over here, but can you just kind of lay out the connection of like what the publisher exchange is and this connection between content and exchanges? And
yeah, and we'll tie it back to some of the themes that we've been talking about. So yeah, want to shout out Arnav from Hashkey. It had a great piece about this. I think Multicoin did as well. But publisher exchanges are basically combining content creation and value exchange in a single platform. So you have publishers, they issue assets, right? They issue content. Their main job is to acquire attention. And you have exchanges which have historically mainly been separate, that basically these platforms command like the flow of money. So this is PayPal, eBay, Robinhood, Coinbase. And more frequently, even in Web 2, you see the vertical integration of these things. So things like, the Spotify merch bar, or, embedded shopping and Instagram and things like that. Right. And I think we got started talking about this because I see Pump.Fun as kind of a early example of a Web3 publisher exchange. You have users minting these images as meme coins, and they are meant to like grab attention, right? And then a built-in marketplace that lets people trade them. A couple of them get people very, very rich early on, right? That grabs more attention. That creates this like really powerful feedback loop where um, you come to buy a meme coin and then you want to create one, right? And it's really interesting. I think the additional potential of like doing this in Web3 setting is that it's not just a single loop, right? Like a lot of these publisher marketplaces are a single loop, whereas Radium, right, can come and grab the liquidity and they can graduate to Radium, but that's like not really showing, I think, the full potential of like how this could become multi-loop. But the idea is that issuance feeds the exchange layer like feeds issuance. And going back to what you were saying, Michael, like there's two ways to do this. You'll have, I think, net new publisher exchanges they're rare, but they're incredibly powerful. Like I told you, we are I'm helping build Delta Network. We, like any other platform, have this cold start problem of needing assets, but also needing the asset issuers need apps, like we were talking about, right? And as an L1, I mean, this is like the dream customer for you. It's centralizing a huge amount of asset issuance on one platform, right? On your platform, and then that's driving attention. And then there's going to be apps that can permissionlessly build on top of like these assets, right? Giving them even more utility. But they're really rare to find, frankly. And like sometimes you just have to like come up with an idea yourself and go incubate it or something like that. But there's also this idea, I think, where we can, a little bit easier of a path is to turn existing publishers into publisher exchanges. And so this is, let's say I'm reading a Blockworks research article. I have some credential that's issued to me for being a subscriber. And then I'm scrolling down and reading about like this perp dex. And then let's say, using like an embedded frame or something like that, the perp dex shows you an advertisement where you can use your credential as like credits, right? To go try out that application for the first time. Or Austin, honestly, like even a lot of these issuance platforms, right? Like coin lists, it's not, we can talk about permissionless versus permission, because I think it's super, super important. It comes with like interesting trade-offs, but let's say with CoinList is like a, permissioned issuance, right? So this is not like any project or any person can come mint and sell on CoinList, but they try to curate that to high quality assets. And then they try to keep you on the platform, right? They want you to go stake via CoinList. They want you to go like lend and swap and do all these other sort of like, basically revenue generating activities. That makes the platform more attractive for the next potential issuer that's saying, oh, look at all these, customers using like the product that they bought on the platform, right? So yeah, I think that's maybe like you're trying to derive some signal through the noise. I think the challenge and the trade-off that I alluded to is when it's fully permissionless to issue these assets. It's great. It can go viral. It's easy to use, but there's no innate utility, right? Necessarily on top, versus like the polar opposite end of the spectrum, which is like, I don't know, issuing like an RWA, right? And having like a secondary marketplace for something like real estate. Like it's harder to scale that supply side of assets on your platform, but there's immediate utility, right? Because it's gated and limited to only like certain ones. So I think we'll find a middle ground here. So it'd be like bloggers issuing some token via like a Substack, specific version of this social token infra that actually guarantees like revenue to be redirected to the token holders of the social token. So yeah, there's lots to talk about here, but pause.
Yeah, I think like one thing I've been thinking a lot about is like I've been talking to these issuers, like these people who are trying to build something that has like typically gotten a lot of attention, and like they're like, I want to build a meme coin. I want to figure out a better way to monetize the attention that I get. And so these are people who typically are like the typical people that someone would think of when you think of attention. This is like fashion designers and artists and music people. Like these are people who have had traditionally a very difficult time monetizing the attention they get. And I've actually like thought a lot about like been working with some of these people on like how do we rethink how they monetize through issuance, and thinking about how they monetize attention, because these are people who have a very difficult time monetizing it, but they generate so much attention. So like what, for example, I've been like talking a lot with like the Self Shill, but like the Yap Capital team, and like they're like building a fashion brand inside of a meme coin, but it's also like they were at Paris Fashion Week and had their stuff there, and it's like they were getting the front page of Vogue and all these huge attentive like Instagram posts through fashion. And it was like people were like, wow, that hat is so cool. Like, and I was like, it's a coin, right? Like that's like in some sense, like that's the cool part is like all this attention's flowing in, but it's very difficult to monetize it all today. And it's interesting sort of seeing like these worlds combine, like the massive amount of attention they get on Instagram versus like the sort of like difficulties they've had monetizing. So I think like I think one of the reasons that is it's just too hard to integrate. It's too hard to use these markets. They're too separated. And it's very important that we abstract all of this away and make it much easier for people to use. And that's sort of been the core thesis of Doppler, which is our first product. It's like, how do we make it just like trivially easy for anyone who's anywhere to build something that's permission or like is interesting and has value? And I think going back to your point about permission versus permissionless, I think the way you solve that conundrum is by having a market structure that rapidly prices these assets. Like in some sense, like if you have a permissionless capital formation, you're going to get a lot of spam, a lot of worthless stuff, and it's up to the market and up to the mechanism that they're being used to filter them all out. And so that's like what we've really focused on is like in some sense, like every pump token is valued the same exact way until someone buys it. It doesn't get cheaper. And that's actually very bad because in some sense, it's very hard to know what people value when the price doesn't go down. And so you have to build a market structure in which the market itself is pricing these assets. And I think that's when we'll sort of see the cream naturally rising to the top, and we'll see the benefits of people picking these assets because they are benefiting greatly by picking the ones that win. And you just can't buy everything because they'll go down. And that I think is when we'll see the final version of not the final version, but an advanced version of what permissionless capital formation looks like.
All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed code base ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap v2 and v3 without a single hack. So Uniswap v4 is dedicated to bringing that same level of security and transparency to the v4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there is a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today.
Well, how much of the, like, in order for there to be some sort of non-speculative or potential like utility, right? Sure, you can make issuance could still be like sort of permissionless, but how much does that also depend on like multi-party coordination, right? Of ways to go then like, use the token or for the token to derive some value. I'm thinking about these content creators, like maybe people holding this token is a signal for another company to go target them, right? With an advertisement or something like that. I guess how much are you thinking about that? Like in the post pricing kind of like what do I do with these things afterwards?
Yeah, I think how we think a lot about it is like the LP of the token is the first revenue source for the token. So all of our fee revenues from the LP go back to the token itself. And so it's the first revenue generating asset. And in some sense, like, do you need another one? Like, as long as you're bringing attention, bringing value, and people buying and selling, that creates value for the token through the fee returns of the LP. And like, as long as you're sort of the ability to get people to buy the token for some reason, maybe like there's a hat involved or there's like gating for something, like that directly benefits the token and the ecosystem because it's slowly growing in the fee returns that it has. And so I think like we'll see a lot of that formation is like, how do you build these these revenue streams for these assets through the actions people are already using. So like you can imagine that like maybe an Instagram post like sells the ads on the Instagram post, and some of the value goes back to the token that was attached to it. And so like these are just like typical value streams that are streaming back programmatically to the underlying asset. And I think like that we'll see a lot more of that because it's much more transparent. It's also very easy to set up comparatively to like how things are set up today. Like I know people who are like influencers, and the difficulty of getting like ad
Mm,
deals for influencers is insane. And so
mm,
it's like, why do that when you can just like say, oh, this app has this, like I'll just stream back the ad revenue to their token. It's so simple to do and so simple to implement. And I think we'll see a lot more of these things as like you have a wallet or you have a programmatic way to give people money. And it just simplifies things at the end of the day. Like you don't need a contract when you have a smart contract when things are enshrined on chain. Like in some sense, like when anyone integrates with Doppler, I don't need an SLA from them because when they integrate with me, they're essentially signing a contract with me through integrating with me on the smart contract level.
mm. I will say maybe just one potential challenge there is these influencer deals are extremely bespoke and
Yeah, yeah,
oftentimes
they
like
are.
the best fits, right? Like it's not fungible ad inventory. It's
Yeah,
almost super info. But you know, one thing that I think is just from my perspective is just I didn't really understand this, and we'll link this in the show notes, this piece, but just how good of a fit content and attention is with exchanging value. And there are many examples of this that you could look at, and Arnav goes through some of them in this post. But you know, you have kind of two different business models: some starting with an exchange, and then of value or money, and then some starting with this exchange of content, and then them integrating and making quite a bit of money. And you know, he talks about TikTok, the TikTok store, or Instagram, like live, where you could sort of see something in a photo and then purchase it. And then it integrates the other way as well. So Robinhood has been acquiring, you know, they famously bought Snacks, so it's now Robinhood Snacks. Even on Coinbase, they might have removed it, but for a long time they had news on the platform as well. And I can think of a number of reasons why this is good. It also just intuitively makes sense, right? Like if the purpose of is to generate flows right around an asset, then you need to direct attention to it. So from the perspective of one of these publisher exchanges, the value comes from you could keep people on the platform longer, right? Which is what I'm assuming Coinbase does with their news product. They just don't want people logging off to go check the news. You can just do it right there. Maybe you can decrease CAC, like customer acquisition costs, which is maybe how Robinhood looks at it. I think when it becomes really powerful is when the medium that you are displaying the content influences the amount of buying power for the asset. And so, like, here's a concrete example from this that exists in the real world, which is Instagram. So imagine you're showing something, you know, you have the ability to show something on a website versus an actual Instagram post where you can show different models, like trying the thing on and stuff like that. It probably increases the the sales or the conversion rate of clothes or merch or whatever you're selling on Instagram. To bring this full circle, the other reason why I think PumpFun is a good example here is because they, I think, actually saw this connection, and they for a little while there had a live streaming part of the app. And the reason I think that makes a ton of sense to me is because if you have streamers that are doing crazy things or engaging their audience around the meme coin, it's probably going to generate a lot of attention, and it might make people more willing to buy the meme. Now, the challenge of that, and that's why I think, Myles, the question that you asked about permissionless listing versus permissioned or providing some sort of framework or something like that is so important, is the value proposition of PumpFun is that they, you know, decrease the cost of issuing these meme coins to nothing. So you got a bunch of wackadoos, you know, they're issuing the coins, and then when you let those wackadoos on stream anything, they're going to do, in some cases, some pretty dark stuff, you know, so not so great stuff. So that was kind of the challenge there, and probably there's a huge cost for moderating that content and creating an editorial product, which is what you got to do as soon as you get into the content game. So, but I think there's just an enormous amount of white space there to experiment, and crypto is super well suited, frankly, super well suited for this.
Yeah, totally. But if you're on like the fully permissioned version of that, like it wouldn't be hard at all to have the teams come on your, you know, the coin list, like whatever it is for a live stream, talk about the project, all like very buttoned up and clean, right? But definitely less like sort of viral potential. Yeah, there's something there.
Yeah, and you know, when you go to more of a permission model for media in general, that implies that you have to kind of hire people, and the coordination cost is much higher versus, you know, social media. What's so great about the content creation is that it's all free, right? For Facebook, they don't pay anything for all of their creators, and it's just free ad inventory for them. So that seems to be the direction of like truly scalable media in the internet age. But I mean, I don't know. All right, guys, I feel like we've covered an enormous amount of ground here. I guess any closing thoughts or anything that we didn't get to? I don't know, just thoughts and memes or dexes or anything in general.
I mean, yeah, I think it's on Blockworks to become the first non-degen publisher exchange. You guys got a little way, embedded payments. You know, there's a lot for you guys to do. You got your work cut out for you.
Yeah, I will think about it. We will see, but yeah, it's, you know, I do think that there are, for company like Blockworks is a pretty traditional company, right? We're a media research and data shop, and you know, you could kind of roughly switch the industry out underneath us, and the business model would still make sense. I do think one of the advantages that more traditional companies have in crypto is you are going to start to see products like leveraging things and doing things on chain is possible for us in a way that it's not possible for other industries. There are new tools that we're building here in real time that if you figure out the combination or the right business model, yeah, you can take a business and really supercharge it. So I'm not saying no, Myles, saying we'll talk about it.
Say goodbye to SaaS, bye Blockworks subscription revenue, income micropayments. Yeah,
you could do micropayments through a bunch of different DeFi applications. Like you could have like a Morpho vault. You could have a Blockworks Morpho vault, where like you charge a fee and in the interest that they earn, and that pays for the subscription, right? Or we talked about another idea, but that's one that we didn't talk about. So I feel comfortable just coming up with an idea versus talking about something that we actually talked about. But there's a lot of ways, right, where you could actually, I'm sure people, and it might actually get more eyeballs on Blockworks research because they feel like they're not paying for the subscription, even though they are. It's just part of like this fee. While they're earning money and they're paying you and they're getting something, and to them they might think it's free, versus it going to like I don't know, Gauntlet or something like that. I don't know.
Right. Totally. It's super. You guys all get your allo checks, by the way. So you've all earned your advisor allos. But yeah, I think that there's definitely something there, and just eyeballs and attention in general are, you know, Austin, at some point during this, when we were talking about narratives, you talked about app season. I mean, at some point, right, like we will have apps. I think it would be really positive if during this next bear market or downturn or whatever, instead of, you know, we love infra and all that stuff is great, but like just more of a focus, an extended focus on apps and generating fees and use cases and products, I think would be very positive.
Hopefully before the bear is over. Hopefully not 2 weeks, actually. But
yeah.
Let's go, baby. Let's go. All right. On that little cliffhanger, I think we can probably close it down here. Guys, thank you so much for doing this. This was a really fun episode. Austin, Myles, Jim, if folks want to find out more about you or follow you or whatever, what's the best way to do that?
I guess go to Austin Adams 10 on Twitter, and you'll see me yapping.
Go ahead.
Go to delta.network and learn about Delta.
Go to @VelvetMilkman on Twitter and watch me shitpost.
What is the the origin story of Velvet Milkman? By the
Oh,
way, Jim? What's the...
I'm glad you asked, Michael. So, my Twitter account is from like 2009, or
Wow.
maybe even earlier than that. And there was this like I used to be a tax accountant, and so I used to do like long hours during tax season. And tax season goes from like January to like April 15th. And so the final four is like during that period of time, right, where they have like the brackets. And back then, like on the internet, there was like this thing called like the name of the year. And they would have these like brackets with like people's names that were just like the craziest names that like you could ever think of. Like I think one kid's name was like Pepsi Coke. Real name, like legal name, right? With like a link to that. And there was this one name, Velvet Milkman, that I just thought was like so good. I've looked up Velvet Milkman.
You gotta find this guy. Yeah.
Guy?
Girl.
Woman. Yes. So she was the head coach of golfing at Division I University of Georgia. And she wasn't on Twitter at the time. And so I just took at Velvet Milkman. And when you Google Velvet Milkman, unfortunately, I don't have a lot of followers. So I am not the first result that comes up. She is. And she's a retired coach of women's golf at the University of Georgia, and she shares her name with me.
Jim, I hope at some point Velvet has tried to open a Twitter account and very confidently thought no one would possibly have this name.
I'm confident that also has happened. She must hate me, and she's like, "And what is crypto? What is cryptocurrency? Like, what is going on here?"
Oh my gosh. That's awesome. That is so much of a better origin story than I could have even imagined, but that's great. I'm glad I asked. All right. Well, now you're going to get a bunch of followers because, Velvet Milkman. Go over, follow Jim, Myles, and Austin. And yeah, guys, thanks. This was a ton of fun. We'll have to do it again sometime soon.
Absolutely.
Yeah.
Thanks.
Awesome, guys.